Good morning, traders and investors. My name is Roger Scott, and it's Friday. It's September 23rd, and it's about 8:08 in the morning. The market's going to be opening up in about an hour and 22 minutes. Now, the Dow's down pretty good, definitely not random, 350 points. The Nasdaq's down 150, even though we closed pretty well yesterday. Mostly, this is because of global economy and because of what's happening overnight. And I'll talk about that a little bit right now to kind of fill you in on to speed. And by the way, folks, if you're getting value out of these videos, if you have a question for me, post comments below this video in the Wealth Press YouTube channel. I love to hear them. I'll respond to them. And if it's a good question, I may even bring it up in this video. So definitely post your comments and feedback in those videos. Now let's get into today's video. Global stocks fell for a third day Friday after more rate hikes by the Federal Reserve and other central banks to control persistent inflation. The other central bank portion is what got us right now overnight. Wall Street futures were lower following rate hikes Thursday by Britain, Switzerland, Turkey, and Philippines. So that's what's causing the stock market to go down this morning before the opening bell. The Fed hiked its key rate on Wednesday for a fifth time this year and indicated more is to come. I believe they're going to do it at least one more time before they wait and see what happens. Investors worry that central banks might be willing to tolerate a painful economic slump to get prices under control. They're going to do whatever they have to, but they're pretty political and they don't want to crash this market either. Now, some point to signs that the U.S. economy is cooling as support for the Fed to back off plans for more rate hikes. But Mr. Jerome, wait till I get reappointed. To be honest with you, Powell said Wednesday that rates will be elevated for an extended period of time if needed to get back to its 2%. And, they're going to posture. They always go over and they always go under. They never get exactly right. So keep that in mind, too. You got to take this stuff with a little grain of salt. U.S. consumers' inflation eased to 8.3% in August from previous peak of 9.1%. But this is the problem. Core inflation, which strips out volatility in energy, gives a clearer picture, it rose. So that means we may not have peaked out yet, which is a huge, huge problem. And that's why the market's reacting the way it is. The Fed on Wednesday lifted its benchmark rate again, which affects many consumers and businesses to a range of 3% to 3.25%. It released a forecast showing it expects the benchmark to be about 4.4 by year's end. That's a full point higher than they envisioned back in June. But as of right now, at least for a few days ago, the bond market was able to tolerate it. Not anymore. The bond market's going down. If the bond market's going to keep going down, it's going to keep putting pressure on the stock market, and it's going to keep pressure on the consumer discretionary stocks, which have, in fact, fallen into their range. Now, what's interesting is if you look at the Dow Jones, consumer stocks are actually holding up better than energy stocks right now. That's a very positive sign. Notice the Dow Jones. Look at that. We just broke the low right here. That's very, very, very significant. We haven't broken the low. We're right at the low. We're near the low that we made back in June. But the bottom line is, and this is really interesting, if you look at the overall structure of the market, look at this. This is really weird. Utilities, consumer discretionary, healthcare, consumer staples. This is really out of whack. This is not normal. Consumer staples should be near technology and communication services. So you've got communication services here. You've got the consumer discretionary all the way up there, and you got technology in the middle. In all of my years trading, I've never seen such I've never, honestly, I'm not kidding. In all of my years, I have never seen such fragmentation, which means the market is really, really getting oversold. And that means these sectors, the consumer discretionary, the technology, the communication services, they have to come together. The other major factor, really another major factor is utilities, healthcare, energy, they're all over the place. This is just completely all over the place. Now, if you look at it on a 6-month basis, it makes a little more sense. Utilities, energy, consumer staples, healthcare. But if you look at it cumulatively, it makes zero sense. Consumer discretionary up here, communication services down there. I mean, they're very, very similar stocks. It's not like these are getting any less sensitivity from interest rates than consumer discretionary. So this is really, really messed up right now. And part of that has to do with the put-to-call ratio, which is grossly, grossly oversold. I want to show you where we're at right now. Look at every one of these turning points since April. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times. Every time we went up and the market went up. This is a sign of the market bottoming out in the short term. And that means the odds are very, 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 very strong that we are, in fact, going to go higher and not lower in the market. Now, if you look at, let's just go to the main page real quick. I want to show you something here. If you look at the indices, the heat map, and let's just look 5 days. Look at this. Consumer staples, utilities, information technology. You've got defensive sectors, speculative sectors. Let's look at a 30-day. Utilities and consumer discretionary. It makes 0 sense. Just yesterday, this says today, but it's yesterday, you still have communication services. So sectors are just out of whack. The market is very, very distorted. And if you don't believe me, just look at this. Remember I told you this was going to happen about a month ago? That this was going to look like this? Well, now it's looking worse than this, and that's the time for this thing to rally. What I'm encouraged is by the fact that energies are still 57% above the 200-day moving average. Utilities, 55 above the 50-day moving average. So defensive stocks are still controlling. Another thing that I'm really encouraged about is the fact you've got 21% of stocks in the Russell trading above the 200-day moving average. Look at the NASDAQ 100. Not good. Not good. Matter of fact, look at the Dow Composite, 17%. Look at the Russell 2000, 21%. Very, very, very positive. Hell, look at the S&P 500, 18%, 21%, 10%, 14%, 5%. The Russell stocks are holding up the best. That means small caps are starting to see or smell that the end of this downside is coming and that upside is ahead. That's really, really, really important for us. Now, I was showing you guys momentum levels on, where is it here? Let me just go back here. Oh, I'll just go back and make it up again here. Here, just go to CPC. Yeah, there it goes, 116, 118. But you could see here we're all the way at the top. And usually when we see this, you see a decline in volatility via the VIX, which hasn't really been going up all that much. I mean, look at that, just a little bit more. But we haven't seen that crazy spike in volatility like we saw here. Let me just change this so you could see it better. We haven't seen these crazy spikes. I mean, this is not a big deal when you see the Dow all the way making you lows or near the lows. I would expect volatility to really, really, really spike. Not seeing it. Also, the bond market, it's getting extremely oversold. Extremely oversold. I mean, it can't even. It's just sitting at the bottoms here. The divergence is so strong, it can't even register. Look at this, up, down. So we need to move up. We're going to go higher. That's why I've liquidated the shorts and have gone long, and I'm a little more bullish than usual because I think the market is bottoming out around here. Now, this news is negative for global events, but it looks like the worst may be behind us, or once again, we may be sitting at that near or medium term levels on the Dow. And if that's the case, the odds are we're going to be bouncing in the short term. Now, something very, very important for you. Don't try to bottom pick right now. If you are looking for stocks right now, the best way to do is to look at these stocks that are coming off the highs. They're a lot better, like Enphase Energy, like Albemarle, like Unum, this stock right here. There's a lot better stocks to choose from than bottom picking. Regeneron, Lamb Holding, all of these stocks that have barely gone down, CAH. So if you have the CSI scan, and you should have it by now, pick the best stocks from the scan, and those are right here, and those should give you the best performance, like General Mills, Genuine Car Parts. Those are the stocks that you want to get into right now. You don't want to get into these bottom pickers like NVIDIA, STX, Stanley, Adobe, FedEx. You don't want these stocks right now. You want the strongest stocks. The strongest stocks tend to lift a lot better, a lot better when markets are pulling back from lows than stocks that are at the bottom. A lot better. Now, I want to talk about something. We started a program called Codebreaker, and here's the program. This is the members area. We started the program last Tuesday. Today's Friday. That's right, this past Tuesday. we got this Cirrus trade. Now look at this. We give you the profit factor and we give you the historic win rate for every trade we give you. We can't log in our profit factor because we haven't had a loser. You got to have a loser to do a profit factor calculation. But so far, we closed this trade. We had it for 24 hours. We got in on 920. We got out at 921. We got in right here on this bar, and we got out right here on this bar. We got out on the option for, let's see here. What did we get out on the option for? It doesn't say here, but I know we made over, here it is, 20.27% return. So you could see it right here on the stock in 24 hours, and now we're long AMBA. And look, 74% historic win rate, right? Profit factor of $4.76 for every time we do it, the name of the pattern, and these are smaller stocks. So I am really, really excited about code breakers, and look at how long we held the trade average so far. So far we're looking really, really good, and I am extremely committed to this program. What I need to do is make this a little narrower so you could see all the returns. The stock made 2.38 return, but the option made 20.27. I know some guys made as high as much as 31% all overnight. Now, folks, that's just scratching the surface of how Codebreaker works and what it can do. And boy, I'm really gung-ho on this program. But if you want to learn more about it, I put together an educational session that you can watch now. It's really cool. It shows you how I find the stocks. It shows you the criteria. It's really heavy-duty stuff. And I talk about 100% winners on 146 stocks. All you have to do is click the link below, and you'll have access to all the details of my new Codebreaker system. Plus, I'll give away my top Codebreaker stock straight from my hit list. Click the link below, get all the details. I promise you won't regret it. You want to learn how to make money with small caps in this crazy market? Highest alpha stocks that have 3, 4, 5, 6, 700% returns. Imagine matching the best high probability patterns with the highest probability stocks. It's a match made in heaven. And that's what Codebreaker is all about. So check it out now. And I want to hear comments, feedback from you. Post your comments below the video in the YouTube channel. That's where the link is too. You could find it there if you can't find it. And I'll get back to you right away. Bye, guys. Have a great weekend. Bye.